So I started the morning off very, very cautiously. Here we are at the open. We gapped down, but we landed in a trap zone. Trap between the 50 period moving average and the 200. Or you can look at it like you're trapped between the two major moving averages, the 21 period moving average and the 200 period moving average. All right, so we gapped down. First, of course, I'm looking for the 50% retracement, but I got faked out on the first candle. Thought that tail bar. Remember, I talked about that tail bar in the last video. So I saw that tail bar. I jumped in the puts, and then we pulled back. Put my stop loss at the top of that tail bar, where it wicked. And I'm also confident that we are not going to fill this gap, which would be coming to the top of that drawn in trend line in this first move up. That the probability on that is very low. So I'm very confident that that's not going to happen. But we did get into 684 put, which is a 21 delta. Again, like I said, I got my pinky toe back in the water. Definitely a little shaken up after that L yesterday morning. So I'm proceeding with caution. This is letting me know, okay, your accuracy is a little shaky this week, my boy. So we need to tread lightly. So I'm watching. Now it's showing me some fluctuation. We had a top and tail bar with a long wick, followed by a power bar, green power bar up, followed by a break of the 21 period moving average. But now we have a tail bar from my stop loss. It's the irony. My stop loss is an area of resistance. Just keep that in mind. Your stop loss is an area of resistance. Now it's serving as like an area of indecision because we got a lot of blue and red candles playing alongside this stop loss. And this is the perfect reason why I do a manual stop instead of setting a stop loss, because the manual stop allows me to have a little bit of flexibility, and it's more of a warning than a hard stop. All right. So looking back in hindsight, watching this video with you all, it's letting me know that I missed an opportunity, and I missed the opportunity to add right here. But I was a little bit concerned, one, that I went in heavy adding contracts yesterday and it went against me. So I was a little bit afraid to get punched in the face again. I was flinching. All right. And because I was flinching, I missed the opportunity. Now I'm also seeing a bear flag. I see the flagpole, which is this power green candle crossing 692.16. And then we start to have like the bear flag, which is like that gradual move up to the right. All right, so as it moves gradually up to the right, that's a symbol that it's gonna collapse. So we do see the bear flag, but I should have added, but I wasn't confident because the moving averages are pointing up, and I felt like we may, this is still early enough, 2, 4, 6, so we got 1, 2, 3, 4, 5, 6, 7, 8. We're on the 8th candle, which means it's only been 16 minutes. So it's only about 9:46 in the morning, and we already down on 2 contracts. I could add a third contract, but I would rather break even on this trade when we return and then have an opportunity to build a position with another fresh opportunity instead of going too heavy into this position like I did yesterday and get cooked. All right. So, and I also gave this option doesn't expire until over the weekend. So today is Friday. It expires on Tuesday. But although that gives us time, you got to understand that the theta is high. The theta is higher than the delta. All right. The theta is higher than the delta. And theta basically means whenever you see theta, like if you see negative 0.25, that means that every day your option is going to lose $25 in value. So if you buy a $100 option and it stays flat all day, it doesn't go up or down. At the end of the day, at the end of the day, the market closes, your option is still worth $100. The next day when the market opens, your option will be worth $75. Okay, so the theta tells you how much your option is going to lose value every day between the day you buy it and your expiration date. All right, so we had 3 days, but this still had a very high theta. So I use theta when I'm trading the SPY to slow down the decay, but I never really hold options the next day unless I'm cooked and I'm hoping to come back to break even, or hoping that we might have a gap up or gap down. And the key word is hope. So that is amateur. All right, so I don't advise anybody to do anything. I hope that you're learning something from what you're seeing and devising a plan that's suitable for you. All right, so Daddy did that, so hopefully you don't have to have it like that. Okay, so here we go. We're moving back down. We went up and then we broke through the 21 period moving average, and now we are retesting it. And as you can see, we have another bear flag forming. So even though I see this being stuck in this trap between the 21 and the 200, but being above the 50 is causing some mixed signals to me. It's impacting me being convinced that we're definitely going to continue to the downside. So I'm getting some mixed emotions. One thing that I'm noticing now that I didn't notice in the midst of the trade is that we are looking to form a second top on a double top. So that trend line that I drew in this particular case was throwing off the pattern that I'm witnessing now as I watch the video back. All right, so if I would have paid a little bit more attention and say, okay, here we go with this double bottom, but we're not making a higher second bottom. The second bottom is lower than the first one. So if you flip this upside down, it would be like a U, but the second double bottom would be slightly higher. So that would be like a higher low. We have a lower high here. I don't know why I just explained all of that to y'all like that. Sorry. But yeah, we have a lower high here. So because we have this lower high, I'm a little bit more convinced, but not all the way, that we're going to continue back down to break through 692.37, which is the 50. And if we break through the 50, we are likely to go down to the 200. All right, if we break the 50, we are likely to continue down to the 200. From my experience trading the SPY, I don't know what Tesla is going to do, or MU, or any of those other stocks that y'all trade. All right, I don't know what any of those other stocks. So also, I want you to know we switched time frame. So this is the 15-minute time frame that we went to, because it's helpful to see how the main other charts are performing, because it's all happening at the same time. Nothing is different. But now when I look at this chart and I see, okay, on the 2-minute chart, here we are approaching the 50 period moving average. And on the 15-minute chart, we're looking to break through the 13 and head to the 21. You know, so I do feel confident that we're going to continue to the downside. But again, I still want to preserve my position size and make sure that I'm positioning myself properly. All right, I don't want to overextend myself, but I did give us ample time. To make this happen. And having those mental price targets in your head, like, you don't also have to set a take profit on the chart if you're going to watch it. But if you're not going to watch it, that's when you will want to go ahead and set a take profit if you feel confident. Also, something I'm learning is that if we are concerned that we might like get a quick wick, like, okay, as soon as it touches the 50 period moving average, it's going to bounce up, then it is a good idea to go ahead and place your sell order just ahead of where you are. So right now, if you look at the ask price on the options chain, it says it's at 142. So if I wanted to, I could go ahead and sell at 152, and then it'll just put a working order under the P&L. And whenever it hits 152, it'll fill my order. So that's another thing you can do. You can start to put in your orders ahead of the move if you believe it's going to go in a certain direction, or maybe you buy an options contract at this particular price, but you go ahead and set a buy order at a lower price. So if it pulls back, you'll pick up that second contract, or you set a buy order ahead so that if it breaks into profit, you can add a contract at that price. All right, so there's a ton of ways for you to skin this cat, but it all starts with strategy, discipline, risk management more than anything. All right, and conviction. I might have already said that.
Hey.
So here we are breaking through the 50. So if we break through the 50, we are likely to go to the 200.
Hey.
But we have this big area of support at 691.30. I guess that's 30. 691.30. 691.30. So, okay. And here we are. I'm looking to get out of this particular trade because my entry was terrible. So at this point, we've come back. We're in profit. So let's go ahead and get up out of here. We're going to get rid of one of these contracts because look at us. Kind of that exhausted stretch always concerns me. I sold one at 5%, and here we are going to sell the second one. All right, so we sold them both at 5%. Peace and love, and I hope you get rich. See you in the next video. Comment down below, leave a like, and subscribe.